Hello and welcome into the KE Report. Chad and Corey here, getting an update from Erik Wetterling, also known as the Hedgeless Horseman. And we'll put a link to the Hedgeless Horseman website down below so you can follow along with Erik's work. And Erik, we were talking off mic about some of the news flow that has your attention out of the junior mining sector. And one of the companies we kept coming back to was Magna Mining, traded on the TSXV under the ticker NICU and the OTCQB under the ticker MGMNF. And we've had Jason and Paul on the show a number of times talking about their desire to go from development stage into production. And some big news broke the week we were at Beaver Creek Conference in Colorado that they are actually acquiring a producing copper mine in Sudbury, and all of their assets are in the Sudbury camp. This is big news for the company. It was big news at the conference. They've got a bid in for the producing McCreedy West copper mine and the past producing Levack mine and Podolsky mine. So actually a couple of mines. What do you make of this transaction as far as the move from not just working on their current Green Hill and Shakespeare projects, but bringing in a portfolio of producing and past producing assets?
I mean, we've heard a company say, or Jason say, that he wants to build a 3 to 5 mine producer over the next 3 to 5 years. And, everybody was basically, I wonder how they're going to be able to do that. And all of a sudden, we find out how they think they can do that. The most interesting thing about this, first of all, this looks like an absolute steal, kind of what they did with Green Hill. It looks like such a good deal that you almost get paranoid. But let's not forget, the funny thing is that these projects were worked by FNX Mining, where Jason and a bunch of the geologists at Magna Mining worked and sold to KGHM. So now their FNX version 2.0 is buying back the same projects they once bought from, I think it was Vale, bought their non-core assets, proved them up, made discoveries, sold it for like 1.6, 1.8 billion to KGHM, and now they're buying them all back. So it's like these guys know Sudbury, they know the geology, they probably know how to explore for footwall deposits and the like better than KGHM. They've shown with the FNX Mining that they can take the, remnants, let's say, of these big Sudbury mines and A, find more discoveries, and B, profitably mine them. That's the whole reason why they ended up with a $1.8 billion success. So it's like, to me, it's obvious that they see something that no retail investor can see. And I think this just happens to be, you could probably not want these assets in better hands than the Magna team, I think. So I think they got a good price because they are non-core to KGHM. And I think these guys are the ones that whatever they get, they obviously see the real potential. And these are the guys that can unlock the real potential. So again, when you actually put everything together, I think this is probably going to end up being a remarkable steal, just like Green Hill, basically. So, I think this is perfect. This has been one of the largest, if not the largest position, most of the HODL folios for, I think, like last 2-3 years or something. Now they actually have the assets, so you can see how they could become a mid-tier producer.
Hey, the market actually reacted on the back of that news, too. Nice to see the share price move higher. Erik, have you dove into this asset, though, the production side of it, with any insights into potentially what sort of cash flow the company could generate just at current operations, even from, let's say, last year's data, or if the company is going to need to spend any money to upgrade any of the mining facilities at this McCreedy West mine?
Well, we can only see in the news release they stated that they produced 317,000 ounces at 1.59% copper, 0.23%
nickel. Those were tons. They produced 317,000 tons of ore with copper grades of a little over 1.5%.
Right, exactly. So it's like I haven't done the AU equivalent, for example. I find it easiest to think in terms of gold, and I don't know the recoveries either, because those, I guess, are the gross grades. So I haven't done any cash flow analysis or anything like that. But again, this has been a people's story from day one, as far as I'm concerned. So I have no, and I've said this, in the forums and whatever. It's like these guys are so good that I don't second guess a thing they are doing. I mean, this has been kind of a boring story because they basically, as far as I can tell, never stepped wrong. The only surprises they've come up with is like basically upside surprises. So whatever they're seeing, they're seeing. So I just, by the fact that they are who they are, assume that this is very good news. And if they buy a producing mine, they think it has value. They think it can provide free cash flow. I mean, that's basically the plan that, okay, they're going to use the profits from McCreedy West to basically prove up all of the other deposits they have and, help bring Green Hill into production, for example. So it's like, I don't need to know the exact details, in my opinion, because whatever plan I think or whatever the reality I think is, I think these guys have, plans within plans or whatever. So it's like, in my opinion, I don't need the details. It has just proved very successful to just let these guys work, hold the stock, let them work, and then you get news, upside surprises. And I expect to have 3 to 5 years more of upside surprises.
Well, and Erik, when you look at any time a company takes over a producing asset or a prior producing asset, people want to crunch the numbers on the production, but they're also pointing out in this news release, and I saw Jason and Paul in Beaver Creek, and they were pointing out to me that there's a lot of exploration upside in the footwall, just like they've been doing at Green Hill. So what do you think about the value proposition of the exploration upside really not even being priced in for the price they paid for it?
Yeah, I mean, it was like Magna Mining prior to this deal. I mean, based on if we're thinking a bit longer term, we know nickel prices are crap right now, but if we're thinking, okay, what's the longer term value, long-term intrinsic value of Shakespeare and Green Hill? I mean, obviously higher than whatever market cap they came down to, like 70 million or 60 million or something like that. Again, especially in the hands of guys like this, who are number one when it comes to monetizing this stuff. So the way I saw it is like, I mean, I remind myself of the quote from Pierre Lassonde, you give me free optionality and I'll make you a millionaire. The way I see this, and I've said this in the forum as well, it's like all the exploration upside, all the M&A, all the potential value creating stuff this team could do, you got everything, in my opinion, for free because it was already underpinned by Green Hill and Shakespeare. And I would say I agree with you here. It's like all of the exploration potential. I mean, let's say they almost don't find anything more. I would say it's probably very cheap just in light of current Green Hill, let's say current McCreedy West and the current Shakespeare. That's a lot of years of hopefully profitable production just in those assets as they are right now. And we're going to get a new PEA up on Green Hill, and they're probably going to increase the cutoff grade. So that's probably going to look like a higher margin project, at least, meaning, maybe less tons, I don't know, but probably higher potential margins and all that. So the way I see it is like everything like that is free optionality, whereas like a typical junior explorer, especially a one project or one target junior explorer, there is no free optionality. Maybe there's a 10% chance they're going to make a discovery, so there's a 90% chance and at the end of the day, you overpaid because they're going to miss. I love stories like this where there's like a team that are very good at exploring, talking about the exploration potential, and I'm not paying a dime for it. So it becomes upside potential that is at face value risk-free.
I find it interesting. Some of the headlines say that this is about a $33 million deal, but you dive into it and it's only a little bit more than $5 million Canadian cash up front, $2 million worth of Magna shares, and then an additional $2 million cash due at the end of 2026. And then it's $24 million in contingent payments on future milestones. So that pushes back that purchase price nicely. So, Erik, since the market did, in a way, revalue this stock about 50% higher on the back of this news from where it was trading when it was released to where it's trading now, what are the next upcoming catalysts then? You've outlined a lot of potential work here, but what's the company going to be doing next that investors can look forward to?
Well, I assume things might have changed a bit given that they did close this. I mean, now it's a totally different company, basically. They got a lot more assets than they had just, a week ago or so. So I'm not 100% sure how the plans are going to be going forward, but I would assume that which is kind of typical, that once because they don't actually own the assets yet, so the deal hasn't gone through. So I assume it's going to be, let's say, somewhat subdued until they actually close it and it's their assets, because then they can also probably be more keen to talk about all the potential that they're seeing, and maybe because obviously if you think, we think we have a great exploration target there, are you going to say that before you actually close the deal, for example? I don't think so. So I think we're going to learn a lot more when this deal has gone through. So I think it could be a bit subdued, let's say, and maybe they change around a few things. And as always, probably going to depend on what the metal prices are going forward and stuff like that. And who knows? Let's say they're drilling at Green Hill right now. If they make a discovery in the footwall there, maybe the priorities change yet again. So it's like the more news these guys put out, it's like the less and less I actually read the details, because I just know that they made the best decision, and I can't put myself to question what these guys do, because they have much more stake than me. CEO and insiders own a shit ton of stock. They have done this literally before. They have done it with these literal assets before. So for me to just sit there and try to poke holes in their strategy, I think that's futile. It's like a moot point, I was going to say. So I simply think we're going to learn more. I think there's probably upside surprises, or potential upside surprises that we don't get in a news release, let's say. So I would say we're probably going to have much more to talk about when this deal closes.
Yeah, we're going to work on getting Jason and Paul back on the show just to give us an update. We did talk about that, so hopefully we can ask them about some of these other prior producing mines, like the Levack mine and Podolsky mine. They were also excited about, and they also have a whole package of exploration projects in there we haven't even talked about yet. There's 5 other exploration properties they picked up, so it's a whole basket of things. It's going to be interesting to see which ones they prioritize and how that changes the prior plan. But let's pivot over to another company we were discussing off mic, and that is Western Alaska. It's traded on the TSXV under the ticker WAM, and on the OTC markets under the ticker WAMFF. And they put out some news about hitting a new CRD zone, so they're hitting some silver, lead, zinc in a project that's mostly been gold dominated. Kind of looks like a new area of focus. What do you make of the news out of Western Alaska Minerals?
Yeah, I think this is a very big deal. It kind of, I was going to say, cements the potential of this CRD system. They have slides in the news release where you see the let's say footprint or theorized footprint of the Illinois Creek or their CRD system, how it compares to some absolutely world-class districts that were mined for decades. Tintic, for example. I think right now there's 2 or 3 companies, including Ivanhoe Electric, that's still exploring around the Tintic district, and there's Santa Eulalia. So when we think about, okay, what did we know about Western Alaska before? Well, we know that, first of all, they had a historic deposit or historic mine at Illinois Creek that was an open pit gold and copper mine. I think it was maybe 90s or something, or maybe early 2000s. Anyway, but the real thing has been high-grade CRD, and they've shown some exceptional grade. So we know that the current CRD resource, which is very high grade, almost 1,000 AG equivalent grams per ton, is in the very far northeast of these slides, like figure 4. And now they're hitting, it's a slim interval, but they hit 687 grams per ton AG, 33.64% lead, 0.10% zinc. And that's in the Warm Springs area. And what we know about CRD systems is that the mineralization basically eats its way from the source and away from the source, obviously. So, okay, if you have CRD, high-grade CRD mineralization up at Water Pump Creek, and you just hit high-grade CRD, silver, lead, zinc mineralization 4 or 5 kilometers southwest, do you think there's some scale to this CRD system? Yeah, obviously there's scale to this CRD system. So, it's only a hole in itself, but it's the context of it that they proved, okay, they might have, it doesn't necessarily have to be the same finger, obviously, But I mean, they've shown that they might have hit a finger, or I mean, who knows? Theoretically, I guess it could be the same finger. But just to have evidence of high-grade CRD mineralization 4 kilometers away, and this still hasn't really been explored much at all. And they're starting off already with a 75 million ounce AG equivalent resource. And I listened to a recent interview with Kit Mars, the CEO. He said, from talking to larger players, they say we would like to see 125 million ounces AG equivalent. I think, to warrant development, basically. It's like to put all the infrastructure and stuff like that. So they're at 75 million ounces AG equivalent now, with only, basically having drilled the fingernail, I was going to say, of this system footprint. So it's like, I think Western Alaska is going to own a very large CRD system. And there's obviously, corresponding, I guess, porphyry potential and all that. And they even have gold and copper. But I think this was punished way too much. I think it's been, thanks to people front running every private placement basically in a very illiquid stock, especially, since we've been in a bear market. But I think, recently it got down to, I think, 25 million. So just at face value, in light of the potential, I think that's an absolutely ridiculous valuation, because there's not too many unmined CRD systems which appears to have literally world-class footprint potential.
I find this year's drill program interesting because very much discovery focused, right? They're drilling this Warm Springs target and then also drilling this LH target that encompasses their whole drill program from this year. So again, very much discovery focused. Erik, how do you value the risk reward on this then? They do have an asset, they do have resources, but right now they're focused on these new targets. And these results, they're interesting, but again, they're first pass results and they are fairly narrow widths. So with the company spending money this year on true exploration, how do you balance out that risk reward? They're probably going to have to go back to market to raise more money, but it seems like a lot's depending on these brand new targets.
Right. They have, I think, 7 holes that have yet to be assayed. So things might change there, or they might not. No idea. So this is one of those tricky things where it's like, and kind of reminds us that, junior investing, it's not just, okay, I'm a geologist or I'm a mining engineer, whatever, like that's the end all be all, for example, because again, to me at face value, I think this has massive potential. I think it should be valued a lot higher, especially since they're already starting off right now. They already have 75 million ounces AG equivalent. So it's not like they're starting from zero. It's kind of already a discovery, but they're trying to find extensions in this case, or, new areas, new spokes, let's say, new fingers on the skeletal hand, as McGaw likes to call it. So, and this is where it gets, I guess, tricky. It's like, okay, we know they're going to come out with 7 more assays. We don't know exactly what the sentiment is going to be at that point. Just rewind the tape like 2, maybe 3 years, when they hit that 100-meter interval of massive sulfides or, visible sulfides and all that. Stock ran to, I think, $4 or something. That was a time when people actually were okay to taking risk. People were thinking more about how much they could make. Now, 4 years into a bear market, everybody is focused on, how much they could lose, let's say. So it's hard to say. Everything changes. If the sentiment was better, or these next holes are well received, whatever, maybe people will be throwing money at them. Let's say they come out with not so good results. Maybe stock will go down, and everybody's again front running that the next news release is going to be a private placement. So from a long-term perspective, I have a very hard time seeing that this, at the end of the day, won't be valued higher, even accounting for dilution over the next few years, simply because there's so much potential. I guess that's all I could say. I wouldn't be surprised about a lot of volatility, but what it does in the short term, I have absolutely no idea, because that's going to come down to the next 7 holes, sentiment, how well those holes are received. So it's like you're trying to, guess a Schrodinger's cat multiple on Schrodinger's cat's drill holes, which is kind of impossible. I just thought that, I picked up a few shares here recently after the news, because I simply think that it's just cheap. And I don't know how it's going to play out, especially in the short term. But I think at the end of the day, I wouldn't be surprised to, made some money on it.
All right, Erik. Well, I appreciate your outlining your thesis on it for investing in Western Alaska, and we'll keep our eyes out for how those other 7 assays come back in and maybe get an update from you once we know more and how the market receives them. Appreciate getting your update on Magna Mining as well. And if people want to follow along with Erik's work and see what he's writing about, look at the companies he's taking a deep dive into, and also some of the videos he produces, definitely check out the Hedgeless Horseman website. We'll put a link to that down below. And like always, Erik, looking forward to our next conversation.
Thanks, guys. And as always, consider me biased. I own shares in both company, and both are banner sponsors as well. So twice biased.